Good morning, everybody. It's Christopher from Serene Education with the 4 Majors Notice Update for the 15th of May 2013. Morning, folks. Hope you had a fantastic day yesterday. Going to go with the 4 Majors, starting with the Euro against US dollar on a daily time frame using the FX8 Ultimate Trading Strategy template. Okay, so what do we have? Yesterday, nice bearish engulfing candle after 2 consecutive days of indecision at the underside of the 50-period moving average, and also a important day yesterday in terms of finding direction, because we were trading at the prior support and resistance level here in the terms of the fib retracements in the shape of the 23.6 from our January high to our low that we saw here in March. The all-time monthly fib retracement here at 38.2 being a major sticking point for this particular pair. Price only on one occasion actually being able to break above it, however not being able to close and push higher above the 50%, and in doing so recently that negativity playing through. Nice bearish engulfing candle here at the same level that we saw prior hesitation, and sure enough prices have tumbled. And as it stands at the moment now, we see it on the Asian session, a slight move to the downside. We're looking at roughly on the Asian session a move around about 45 pips. Okay, so as it stands at the moment now, looking at my indicator bar at the moment here, majority of it being red, and the most important one being the RMO and the moving average here, the institution moving average across each time frame, complementing each other except for the monthly. R squared selling on the 5 and 15, very much the telling us the sentiments there. However, the 30-minute hourly and the 4-hour candle, the R squared, not complementing that. As the time goes on this morning, and hopefully going to the European session open, we're going to see a real kick to the downside. But as it stands now, the next target would be this price support and resistance level low here, and also our 23.6 monthly low that we've seen recently at 12.7635 mark. We're looking at roughly 150 odd pips to that level. So let's look to capitalize on the downside. Have a look and see if there's any news today that's going to factor in. Quite a lot of news out today, to be frank. Europe, we just had the French prelim quarter GDP figures, negative. Europe, German prelim GDP quarter-on-quarter figures were negative. We have the chief Swiss franc PPI and month-on-month figures this morning, expecting contraction on there. We have Euro, Italian prelim quarter GDP figures. They're expecting a contraction there as well. And then we have sterling. We have Claremont count change averages. We have the average index, average earning index, unemployment rate, which is going to be quite an important one. They don't see a change in unemployment there, 7.9% from the previous month, expecting 7.9% the same. Then we got the flash GDP quarter on quarter. Very, very important. They're expecting a contraction here. Then we got Mr. Merv King speaking later. So these are a hell of a lot of news out, guys, this morning for the euro as well as sterling. And then we have a lot of news out for the US market. PPI month-to-month, core PPI month-to-month figures. We have the Empire State Manufacturing Index, very important one. They're expecting real expansion there. We have seen some fantastic figures for the manufacturing side. Let's hope and see if that actually complements it. Industrial production month-on-month. They're expecting contraction here, surprisingly. 0.4% previous month, expecting a negative 0.1%. So crude oil inventories, expecting a higher percentage there, which is important because the more oil that these companies in the US are storing, that means that there's more production happening. So very, very important. You've got to be well aware of that. But as it stands now in the euro US dollar, we're looking for those lows here, the prior support resistance lows down here at that 12.7635 mark as our next near-term target. On to sterling. Here again, you can see quite clearly recently, this red line of here constitutes to our monthly fib retracement areas, the 23.6. You can see quite clearly price was trading above it for some time. We had higher swings. Everything was looking fantastic. RMO was heading up above this level, the zero line, for the first time in as many months. However, that failed to materialize as price has broken through this area again, and you can see the negativity playing through. RMO is below the zero line. MACD is growing with a lot of strength to the downside. The one thing we've got to be well aware of is prices testing this price support and resistance level here quite noticeably. Excuse me, noticeably a support and resistance level in the past at this 15.2256 mark. So get below all that, plus this 23.6 fib retracement from the highs in January to the lows that we've seen clearly here in March of this year. Get below all of that, then we're in cleaner air, and then we should be targeting the prior low down at 148500, which is the 2010 consolidation low down here, which is a good 355 pips away. So got to get through all this bandwidth over here, get through all this consolidation here, stay below all this, and moving averages and RMO complement each other, and the R squared complements this negativity intraday. Then we're going to start seeing a lot of selling. So budget time, We'd like to see the 4 hour and everything like that getting below that area. So where it is trading right now, to that area, you're looking at 28 pips or so. If you can get below all that consolidated range, you can see very tight range here. You've got 2 dojis in the past 8 hours. So very, very important. The RMO remains making lower lows, and the MACD remains below the 0 line in order to see that. We are seeing that negative sentiment, swing low, swing low, swing low. So that dictates downside movement, all the moving averages above price. So it's important that we see a nice bearish engulfing candle closing lower than 23.6 here, and then we should be targeting that long-term target to the downside at 14.8500. US dollar Swiss franc. Here you're seeing the US dollar rallying against the Swiss franc. A lot of good news out for the US dollar over the past couple of months, which has seen price steadily making higher grounds. And in doing so, you can see quite clearly that the indicator box on the bottom here indicating that a lot of the RMO and the moving average, institution moving average indicator down the bottom here, it's blue. So we know that we're in a positive uptrend, and you can quite clearly see that we're making higher highs. High, 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 high. Very, very good. Fantastic indication of upside. Breaking through that prior support and resistance level here near term at the just short of the 95, 45, 56 mark, somewhere around there. We saw a breakout recently, a pullback, and then a continuation high. And it's continuing now up towards this monthly 23.6 Fib retracement area. Not too far away from it, so if you are trading, just be aware of it. We are trading into a consolidated range. It's a good 47 pips away, so there's still some sentiment still to be seen from that. But if we can get above that, then obviously we're going to be looking at the highs roughly around, ideally target the next area, which is way above us, right up here. But in between from where that is to here, you're looking at another 190 or 233 pips to that level. However, the big one would be the 100. You're looking at 1,628 pips to the upside to the next level. So very, very important. If the US dollar can continue showing us these fantastic figures coming out of the US in terms of unemployment figures are down, production figures are up, employment figures are up, then we're going to still going to see the US dollar gaining a lot of strength. So very, very important. Any US dollar crosses, look for buying sentiment because the US dollar has been doing quite well. Last pair of the day is US dollar Japanese yen. Here again, as I mentioned on US Swiss, we're seeing a lot of might from the US dollar, and you can see it's quite clearly painted here on the indicator box. A lot of the RMO is below price, which is above 0, which is a very strong trend indicator. The moving average, institution moving average indicator on the bottom here is below price, bar the monthly, which is telling us we're in a strong trend. The R squared is predominantly blue, which is good. However, our 4-hour, hourly, and 30-minute is looking negative, but we're still getting that buying sentiment through in our 5 and 15. And we're heading higher. We've broken through a major support resistance Fib retracement area in the monthly time frame, which is roughly around the 100 mark, and clearly resistance over a period of time and a break. And now you can see that sentiment's moving higher. Our next target would be after breaking the 50% Fib retracement, would be the 61.8. From where price is trading right now to that level, you're looking at roughly 310 odd pips and change. Take away your spread, you're still walking away comfortably with 300 pips. But that would be our next target for the foreseeable future. RMO is above the 0. MACD is still showing positive green. And most of the indicating here on the indication box is telling us we should be looking for buying sentiment. And as long as the US dollar is posting fantastic figures out of the US, then we're still going to see the US dollar rally. Standard & Poor's 500 is trading its highest point. Dow Jones is trading its highest point. So there's a lot of good liquidity out there on the US market, and we're seeing a lot of growth. So you would rather go long against the US dollar against its cross pairs because of that. Otherwise, that's it, guys. Short and sweet, to the point. It's pretty much the indicator box is telling us what we should be looking for. Have a cross check against as I mentioned, look at the fundamentals. Very, very important. There's a hell of a lot of news out today. You've got to be well aware of that. Factor it into your trading, and apply simple money management, proper money management to this. Trade very mechanically, and you will not fail. Okay, that's what we want to do as traders. We want to try and alleviate all the stupid mistakes because our head gets in the way. We want to use something that's going to give us a very mechanical approach to our trading, and this indicator is really, really good at doing that. So use it, abide by the rules, be patient, and you shall be successful. Okay, I'm going to leave you with that. I'll see you first thing tomorrow morning. Until then, guys, you guys trade Serene.